Web3 TV.
Hello and welcome to Web3 Talks. I'm Lisa Amnegard, and today we're diving into one of the biggest wealth creation opportunities of our era, real-world asset tokenization. It's the future of how we invest. According to estimates, this market is set to hit $2 trillion by 2030, and Dubai is at the forefront of this space. Joining me right now is Scott Thiel, CEO of Tokinvest, one of the first Dubai licensed firms for an RWA marketplace. So thank you so much for joining me.
Thank you, Lisa. Great to be here.
How's everything going today?
Going very well. Busy times, exciting times. So yeah, it's great to be here in Dubai at this moment. You know, in this location with this sort of support that we're getting from the local regulatory vision,
and especially when it comes to real-world asset tokenization. And just as a little recap, so real-world asset tokenization allows investors to, let's say, own a fraction of a luxury real estate project or even a rare piece of art, all through blockchain technology. So if we look at how this works, what kind of benefits does tokenization bring that, let's say, fractionalized ownership doesn't?
Firstly, is bite size. So traditionally, financial products and the types of assets that we're talking about usually involve very significant sums of money. So you could buy it if you had, $500,000 or $1 million or whatever. And it's the same. If we think about a house, for example, buying a house is an expensive business.
Yeah.
But now we can buy a piece of a house. Now, people would argue, oh, yes, but I used to be able to buy a piece of a house through a fund product or something else. Well, yeah, you could, but actually, historically, those fund products have had things like $500,000 minimum buy-ins. So the difference here is, as we'll do on the Tokenvest marketplace, we'll be talking at buy-ins at more like the $10,000 mark. So people can now come and play and participate in this asset class at a much smaller buy-in size. So that's one of the key differences. I guess the other is then liquidity. And this is one of the sort of technology plus the regulation means that these assets can now trade in a much more efficient way. In traditional finance, there are fantastic places to trade certain assets, stock exchanges, and in crypto, we've got crypto exchanges where, they're great for trading Bitcoins or Apple stocks. But where is the equivalent of that for, pieces of real estate, for example? And there just hasn't been. So it's this evolution of regulation plus technology that means more people are going to be able to buy assets that they couldn't otherwise afford, and there's going to be increased liquidity, transparency around those assets.
I think that's also what has made many people just very excited about tokenization in general. But in terms of just the industry, how it's evolved, it has existed for quite some time, but it hasn't really taken off. So why hasn't it taken off, and why is now the right time?
So it hasn't been a technology barrier. It's been a regulatory barrier. So how do you legally and compliantly issue a tokenized representation of a fractional real world thing, whether it's real estate, art, whatever it might be? And it's kind of crazy as it might sound, it's been the deficiency in regulation that's prevented that from happening. And so we did a report, I don't know if you saw this back in January, and we entitled it, Where Are All the Tokenized Real World Assets? Because all these predictions of 2 million, 16 million, 30 trillion, all these predictions we've seen as to how many assets are going to go on chain. In reality, when we published a report in January, there was only about $20 billion worth of real world assets. Now that's a tiny, tiny figure in the scheme of global finance.
Yeah.
So where are they? Why don't they exist? And it hasn't been possible to legally and compliantly issue these assets on a blockchain. So why Dubai? Why now? Because we have the regulatory support, we have the vision of the Dubai leadership, its alignment with the D33 agenda, a specialist, virtual assets regulatory authority that's come into force specifically to deal with these assets. And now, as we've seen, some of the other key regulators getting on board as well with the recent announcements from the Dubai Land Department about fractional land title. So, where else in the world is that happening? The answer is nowhere. So that's why here is where it's going to take off.
So yes, Dubai is at the forefront of this space. And like we said earlier, the estimate is that tokenization the market will hit $2 trillion by 2030, up from $15.2 billion in 2024. So in terms of what do you think will be driving this growth, and how should investors be positioning themselves now?
Yeah, so I think it's a chicken and egg problem for investors. Like I'm at the coalface of this, and people say, oh, well, where's the liquidity for the RWAs? And I'm like, well, that isn't the problem. Where are the RWAs? There's not a lot of liquidity for an asset that doesn't exist. So this is the year where we are going to see more assets go on chain. So that's, I think we have helped solve that problem, and we're going to be part of that solution in Dubai along with the regulators here. that are going to allow us to do this. What does this mean for investors and what should they be looking out for? Well, it's a whole new asset class. So our license, for example, allows us to service retail, qualified and professional investors and institutional investors. So we can service anybody. Most financial products can only be accessed by accredited or qualified investors. These are people who have substantial sums of liquid cash, generally around the $1 million mark sort of is the test. But people who don't have that have been simply locked out of financial products, or most financial products. That's changed.
But there are so many asset classes that you can tokenize. In terms of assets, how should investors be looking at this new area of investing? What kind of assets should they be focusing on?
You make an interesting point about what can be tokenized, and the answer is everything. There is nothing you couldn't tokenize, if you like. And one of our constant challenges within our business is to try and stay focused on certain asset classes, because it is complex to create these products, and we don't want to get dragged into too many diverse asset classes. So we've tried to focus on real estate, commodities, and fund products. But yeah, there's nothing that can't be tokenized. What we really want to do, though, is when we have someone turn up saying, I've got an asset, I'd like to tokenize it and release some equity and bring in some capital, we ask the question, it's a very simple question, who's going to buy it and why? And actually, if there isn't a compelling reason why someone's going to turn up and buy it, we're not going to create that product.
Yeah, because it's sort of becoming a new way of how investors can diversify their portfolios through buying tokens. So if we sum it down, so basically real estate, commodities, maybe that be gold or something like that, and then financial products.
Yep. Yeah, so fund products. And again, tokenization of funds in large part is going to involve taking funds that are very elite funds that are hard to access. So we're working with a couple of fund issuers where the minimum buy is €1 million, for example. Well, it's great if you've got €1 million to put into one product, but a lot of people don't, obviously. So what we can do is we can break that down into sort of, again, the $10,000 type lots.
Talking about real estate and also a lot from the consumer side of things, but when it comes to sort of the developer side of things, what kind of benefits does tokenization bring?
Yeah, and I think that the developers here in Dubai really get this. Actually, I've been talking to, I won't name names, but I've been talking to some of the developers since as early as sort of 2018, 2019. And so there's been a real understanding of the potential of tokenization for them and their businesses. And kind of in simple terms, what it means is a wider net of potential buyers of their product. I mean, that in its simplest form, that's what we're talking about is, developers, they build things, they sell them. A lot of those are sold off plan here before they're built to finance the build. That isn't the case everywhere, but it's obviously very usual in this market. So really for developers, they see this as a way of expanding the amount of product they can sell and the amount of people who can buy their product. And that comes through, again, in bite sizes. People who couldn't afford to buy a whole one can buy a piece of one.
Can they use tokenization as a way to finance debts?
Yeah, yes, you can. We actually de-risk that for developers. So what we do is with people coming in these smaller fractions, we collect the entirety of the funding. And so the developer doesn't have a risk of default, which is one of the reasons why they end up in a debt situation or a problem with completion of projects if they can't get the financing in. But yeah, there are many different products that can be created to solve that problem. Where we've got a call actually later tonight with an offshore. It's a UK developer who is looking to. It's not a distress situation as you alluded to there, but it's more of a, how do I use this as an opportunity to maybe get rid of senior debt, existing finance I've got from a bank, take some for myself, use some sort of almost equivalent of crowdfunding to do it. So actually using this as a way of restructuring the completion of a build project that he's involved in. So yeah, lots of different things can be done.
So it can have positive benefits for both the developers when it comes to tokenized real estate and also the consumers who wants to maybe invest in real estate for the first time at a fraction of the price and explore an asset class that they might not have that much experience in or diversify. I would assume. But I'm very excited about the platform that you're building. So can you share a little bit more about how this works? I know that it's using blockchain technology. So one of my first questions is, do you need to have a crypto wallet or something like that to even participate?
We designed the platform with my mother in mind. If she couldn't use it, it's not working. So the answer is no. We obviously use blockchain technology, but the Web3 technology is very much under the surface. You don't really see any of that. And it looks like it's a visual interface. And then you onboard, so there's an AML KYC process to verify who you are. That's pretty normal for any investment type platform. And then you deposit funds. We have a range of ways of doing that, both fiat and crypto currency you can use to pay for things. And then you just select and say, yes, I'd like to buy, a subscription to that one or this one or whatever else. In terms of the wallet question, no, we have you don't need your own wallet. In fact, at this point in time, it's a fully custodial solution. So you'll log in, you will see your assets that you've bought, the things that you're bidding on, and all of your transaction history in your kind of, it is a wallet, but it's a wallet that we're hosting through another regulated partner here in Dubai. But for the user experience, it very much looks like a login to a website. Here's the marketplace. Here's the things that are for sale. Here's the things that I've bought. Here's my transaction history. It's all in one interface.
And when it comes to asset classes, which areas are you going to be focusing on?
So for us, with our thesis of why we're doing this, and it's to democratize access to great product, real estate's a huge focus for what we're doing.
Yeah, and also now with the Dubai Land Department on board launching their pilot phase of tokenized real estate with the title deeds, what does that mean? So in terms of when you're investing in a real estate token, do you own that piece of property, or what do you own?
It depends. So there are different structures we can create. So if you think about traditional real estate investing, if you go and buy a property today, a whole one, yes, you become the owner, you get registered at land title. If you go and invest in a lot of real estate today, like if you go and invest in a fund product that happens to have real estate inside it, well, you don't own the real estate. The fund owns the real estate. You just buy a unit in the fund. So if you look at the traditional world today, there is already examples of where you do own the title and examples where you're investing in real estate, but you don't actually own the title. The same thing exists, and we've developed products that are both economic interest tokens, where you don't own title, but you do get the benefit of yield, i.e. the rental returns, capital appreciation, because the thing's gone up in value and we sell it later and you get more. And the exciting thing about what DLD is now doing, and it's, this is an absolute world first, that land title for built real estate at this stage is now in tokenized form, is that's going to be a foundational ability that when we create tokens and people come in and invest in a piece of real estate, one of the things we can now put in there is a piece of ownership. Yeah. So you can actually be a co-owner. There was already co-ownership. A lot of people don't understand that. I think it was limited to 4 people though in Dubai, and I think in the UK it was 8, for example. So there was already kind of the notion of fractional ownership, but only to a certain level. Now it'll be, hundreds of co-owners could exist and each have a title claim. However, our view is that the fractional title is great and it's part of the investor protection and investor rights piece, but it's only part of a product. Like, you're not going to just go and buy 1/100th of the title of a property, because who's mowing the lawns? Who's looking after it? Who's managing the insurance? Who's organising the tenant? For us, what we've been designing is structured products where, here's an asset. We are going to have it managed either by us or using specialist third parties like, rental agencies. But now we can also embed fractional title. So it's a really, really important add-on to the type of structures that we've already been building. Which
I think is a really good point that you make, because if you're, let's say, investing in tokenized real estate, you also want to make sure that the property itself is managed correctly, because otherwise that could affect the appreciation value of the actual
imagine if
asset.
It burnt down and no one had bothered paying for the insurance because no one was really responsible. There's any number of doomsday scenarios you can put in there. And so, but I think being able to also be a co-owner of a fractional, well-managed property, that's a super exciting thing.
Yeah, and also, so real estate tokens is one area. And what other asset classes are you currently looking at?
Commodities is another area. Commodities do exist in relatively liquid forms already. So we look for the advantage of why. Now, there are great examples of gold-backed tokens already in the world. However, the entities that have made those products available, there is always a question of where's the gold? Yeah, and this is the problem with a lot of physical product-backed tokenization. You can have all of this stuff in token land, which is wonderful, but if it relates to a physical piece of property, where is that property? How is it being looked after? How is it being secured? Is it really there if I turn up to get it? And I think some of the existing products that exist in the world today there are question marks about if everybody turned up to redeem their product, would there be enough there? And there are question marks over that, so I'll leave it at that. So we're really excited of working with some of the more traditional custodians, including government bodies that store, whether it's precious metals or other minerals and mining rights, and actually bringing, kind of sovereign-backed quality tokenized commodities to market. That I think is going to be really, really exciting because it hasn't, government hasn't been the first movers into this brave new world. But I think as they do, they will bring a lot more credibility to those asset types.
Okay, interesting. And also when it comes to adoption has always been a challenge. If you look at crypto, it's taken a long time. But how do you see adoption in tokenization? What do you think the challenges are, and how do you think it's going to evolve now this year? Or is there any asset class that you think will adopt faster?
I'm not sure actually about asset class. We don't know. So we weren't really focusing on racehorses, and all of a sudden the whole market's telling us they want fractional racehorse tokens. It wasn't necessarily what we were thinking, but we keep being told by the market that that's what the market wants, so we're going to bring those assets to bear. So I think what the market wants will be driven a little bit by trial and error. And one of the first things we're going to do on the platform is run what do you want to see? Tell us users, tell us investors, what would you like to buy that you can't afford to buy or you can't get access to today? And if enough of you want to do it, we'll go and try and get that asset for you. So we're going to be looking at that. But I think some of the barriers to adoption in crypto have been the technology. Like, it's a clunky, scary experience in some ways. It's got better over the years, but particularly things like DeFi and self-custody wallets. And I mean, if you make a mistake with a crypto transaction and put the wrong address in and send it, there's no help desk.
Yeah.
It's gone.
Yeah.
We don't have a lot of those problems with what we're doing. So the sort of crypto cyber risk that exists, we've just seen some very large hacks even this year with billions of dollars worth of crypto disappearing. So that can't happen with tokenized product that we're bringing to market. We actually have the ability to revalidate, to burn and reissue. We don't have to wind back transactions. Now, pure crypto degens will say, well, that's not fully decentralized. And so no, it's not. But it also means you can't make a keystroke error and lose your assets because we can fix that problem. And yes, there is a help desk. And yes, it runs, multiple time zones. So it's going to be a much less frightening experience. And I think that will help with adoption. But for me, the most important thing about adoption, as I was alluding to before, is what do people want to buy? What does great product look like? What is it that people feel I'm not able to get hold of today? And look, suddenly in Dubai with these amazing new regulations and this progressive looking, jurisdiction, I can come and participate in these exciting asset classes.
Is there any advice you would like to give investors when it comes to, let's say, buying a tokenized real world asset?
Be very careful of unregulated, questionable marketplaces. I am constantly amazed by things that are just popping up where people are selling unregulated promise of fractional investment in things. And it worries me twofold. One, we're doing it right. We're doing it in the full eyes of the law with a fully compliant VARA, license and all of that. But one of the things we've seen that's been very damaging to Web3 through every single phase of it is bad behavior by bad actors. And to me, the bad actors in RWAs are those that are just selling assets that aren't really there. They're not regulated, so they can disappear overnight. So, to me, the advice to investors is make sure you're dealing in a credible jurisdiction with a credible platform that is regulated by a credible regulator such as VARA. That to me is the number one advice, because you're then able to benefit from all of the protections that come with the level of scrutiny that we have to observe as being a regulated entity.
Thank you so much for speaking with me. And your platform will launch this year, I assume?
Oh, certainly this year. I almost wanted to say this month, but it may be next. But yeah, it's we're now talking weeks, not months. So yeah, very exciting times.
Yeah, very exciting times. Well, thank you so much. And I'm excited to see when the platform launches and see how we can start investing in tokenized real-world assets.
Fantastic. Thank you again for your time, Lisa.
Thank you so much. Thank you. And that's all that we had for you today. My name is Lisa Amnegard, and you're watching Web3 Talks.
Web3.tv